All right. Good morning, everybody, and sorry about the late kind of startup. Had a few kind of technical issues given that I got a revamped computer. It also goes again to show you that it doesn't matter what idea you have, it's all about the execution. So obviously, thanks so much for Chris helping me out this morning. It's only going to be myself. There are actually no chartists today, given the long Easter weekend. We do have the very talented James K out, as Australia is out today, and Edmund is also out on leave. So focus today will be very much obviously on upcoming kind of French elections, as well as touching base on a few kind of other things. I'll try and keep it as sharp and concise as possible. And as always, if we go through anything a little bit too quick, do please come back on the replay. So goes without saying, everything we cover solely views and opinions. There are no trading or investment recommendations here. And in regards to kind of quick snapshot of the previous week, at least the things that I think stood out to me, it was kind of a few. There's a lot kind of going on, and I hope I managed to actually cover it all in the attention it kind of deserves today. We do have continued focus on North Korea, with noise coming both continuing out of the U.S. camp as well as posturing out of China. We've seen reports on China troop mobilization towards their border with North Korea, coal ships being blocked. And there's no doubt about it that this is actually historically, or definitely in recent kind of memory over the last few decades, the worst relationship that we've ever had between China and North Korea, which, China was normally called in to keep a tab, or should I say a lid over any kind of potential boiling out of kind of North Korea. We've basically been going through the last week, you could even say 3 weeks, depending on which asset class, of risk-off kind of price action. So interesting to see as of the close of Friday, big pull up in VIX volatility, plus 30% for the week, just south of that kind of 16 kind of handle, and also continued kind of retraction back in yields, both on the U.S. side. We were just 2.3, 2.4 a few weeks back, as well as kind of German side, which has just bounced up kind of 200-day. And of course, JJB's now getting kind of close to getting back into kind of potentially kind of negative territory. The interesting thing is we've seen that continued reflection in risk off in commodities such as oil, which tends to do good in geo kind of political kind of conflicts and tensions, which is obviously North Korea, Syria strikes, etc., has been pushing that. As well as implications of what Russia does. And of course, the precious metals have had a phenomenal kind of run and broken very key technical levels that we'll kind of get to later on. At the same time, on the currency side, you've seen your traditional kind of safe haven flows on the yen, big move back versus the US dollar of 2.2%, as well as interesting kind of moves on the back of other things that doesn't necessarily make sense from a risk-off perspective, such as Aussie doing well, Kiwi holding up quite well, despite kind of pullbacks in commodities, and also emerging market FX is actually doing very well. Big reversal back in the rand, continued strengthening of the Mexican kind of peso, big reversal back in the ruble post kind of the Syria kind of news. Not something that you'd be expecting from a traditional kind of risk off. And definitely, even despite vol being up 30% on the VIX, we've really not had a big pullback in equities. These equity levels, as I will show through one or two charts later, are still very much at elevated levels, and they've definitely been kind of lagging this kind of risk off start or move that we've been seeing reflecting in other kind of asset classes. I think something else that's very much worth keeping in mind was there was a big interview with Trump in the Wall Street Journal last Wednesday, where he basically pulled a 180 on a lot of the things that he was very, should I say, visceral at during the kind of campaign trail. Went back to saying he respects Yellen, thinks she's doing a good job. Went back to saying that he'll not brand China as a currency manipulator. This was a big part of his kind of campaigning. So we've seen a complete 180-degree turn. But, this is actually on a lot more kind of core and visceral promises that he made on the electoral trail, and especially the piece on China. And, of course, we all remember him smashing Yellen and basically implying that he'd definitely kind of get rid of her. And now it almost seems to be that he's opening the door for her to stay longer. And, of course, commenting once again on the U.S. dollar being too strong So if you go back to, I believe it was Wednesday, you could see a big move up in crosses off of the comments coming out from this interview. And I think the only thing really predictable about Trump is his unpredictability, should I say. And I think what that means is you got to look around for people around him really for clues to where the highest probability pathway of policy is really kind of heading. I think moving on to the COT report, interesting to see we finally had a second week of US dollar buying. It was very marginal, obviously, last week, but this time it was a little bit more of a kicker with plus 16% uplift to about a little bit over 16 yards. Do note big delta in yen. The market's now long yen, according at least to the COT report. This is the first time since November, as we've kind of had this kind of risk off flight to safety. At the same time, we've had a little bit of the bulls kind of getting worried in the long Aussie positioning with a pullback there of about 18%. The Mexican peso longs continue to do what we've been talking about for months. I'd expect this to get well over 50,000, maybe into the 75, 100K level, which is interesting because we're still above levels that were, pre kind of U.S. election, even though not by much. I mean, I think it's like 25, 50 kind of cents. And again, interesting to see, again, very little delta in sterling, right? Despite we're on the other side of Article 50. And of course, sometimes, when you actually see no change in positioning, it actually probably tells you which way the wind is going to blow. So from my perspective, this is kind of a sign of kind of strength. And of course, any fallout in the Eurozone, i.e. a Le Pen victory, would serve sterling assets quite well. Moving on to the commodity report, again, a repeat on the grains continued selling. This is I think we're entering now almost maybe the fourth, perhaps even the fifth week. We now have all the soybean contracts at one-year record lows. We do have silver, funnily enough, at a new one-year record high, which is interesting, especially given the fact that gold is still well south of the one-year kind of record high that we'd seen, despite an increase of close to kind of 1/5 on that. We need to get to about 287,000 contracts from these current net long position of about 140,000 contracts. Starting to see again a tick up in energy and WTI, but again still relatively short from the one-year kind of high levels. And again, interesting to see kind of the move down on the live cattle and lean hogs section. And moving on to, more importantly, the week ahead. I've also not put earnings here, which is obviously key. Market still very much focused on North Korea. It was huge celebration. It was birth of the nation's founder over the weekend. A massive parade, propaganda, if you will, a show of strength and power, as well as failed nuclear missile. I don't want to say it's a nuclear missile, but definitely a failed missile launch that blew up, I believe, soon after it took off. We do have flash PMIs. We had the Turkey vote over on Sunday, and it's really, though, all about, obviously, the French elections, which are going to fall on this coming Sunday for the first round. From a central bank decision-making perspective, the only major one that's on my calendar, at least, is Indonesia, where the market's expecting no change. And from a Fed speakers, we have the following. Fisher today, should I say very early Tuesday morning, I believe, Asia time, and then, of course, George Rosengreen, and your main man kind of cash carry. This is incorrect. I think that's just from last week. There is quite a few markets still out today from in Asia, Hong Kong, Australia, New Zealand. A big chunk of Europe is out, but definitely worth noticing that the U.S. is definitely back in. We will also have Kuroda speaking later on today, and later on we will be getting this week minutes from the RBA, the Beige Book, as well as Carney speaking. And we'll actually have the IMF meeting on Friday and Saturday, but I think a lot of that is really going to be overshadowed by the French elections. This is kind of a little bit more of the expectations here on kind of economic kind of data. It's really kind of a flash PMI thing, and final kind of CPI coming out of the Eurozone, and then of course China GDP, as we'll be getting first quarter kind of GDP will be kind of heavily watched. And for those watching New Zealand, milk auction late Tuesday night, and of course most importantly is going to be their CPI expectations, which will be coming through on Thursday. If you recall last time, it missed heavily, came in at 40 basis points, and the market's now expecting that to have doubled. So just a few things. First, North Korea. We touched on this last week, so do please check out the replay of that call in the sense of it's a question of when, not if. Go through kind of the contingency kind of scenarios. But I think interesting to very much see the noise is rising. I think this is going to be something that's going to be thematic. It's going to be something that's going to have to be addressed by the Trump administration during his terms in power. There's a lot of people who I think heavily discounting this, just given kind of historical precedences of just a few kind of incidents. But I very much think we're at a tipping point, if we're not maybe past the tipping point, depending on who you kind of ask out there. And it's really a question of, is it going to be the U.S. alone, the U.S. and China, or China alone that has to kind of go and fix this puzzle, or is there perhaps another solution, if you will, that doesn't end out in some kind of form of tit-for-tat kind of nuclear war? On Turkey, we did have the Sunday vote. I've actually not had a chance to catch up this morning on actually the outcome on this. So this will be some interesting kind of mark-to-market. Obviously, if you're not familiar, we do have the strongman Erdogan, who's ruled Turkey for about 14 years, looking to solidify even more kind of power. Polls kind of going into the voting yesterday were too close to call on how things will unfold. I think I saw one or two kind of few tweets very late yesterday that kind of suggested the majority of the votes were for him to kind of come in. And the kind of view I kind of got was actually, him actually winning would have been short-term kind of bullish, right? I think I'm seeing now headlines saying that basically Erdogan has won, and I think there could be kind of a relief kind of rally, and it's more really from the fact of there's kind of clarity in that rather than him, let's say, going back to the drawing board and trying different kind of formats of consolidating kind of more power. So just something to kind of keep in mind there. Now, moving to kind of the main course, French elections. Here we go again with the polls. Obviously did not work at the Scottish referendum, did not work at Brexit, as we also know did not work at the U.S. elections, but did come through on the Italian elections in regards to kind of predicting the outcome. We do have, and this is the presidency, round two this coming Sunday, and we have, round one this coming Sunday, and we have round two on the 7th of May. And of course, we also have the actual election dates for the administration, which will be later on in the summer of the actual government. So the backdrop, again, just as a reminder, is initially it was Fillon on a rocket ship. Very much looked like he had it in the bag until kind of late, Jan or early Feb, when his ascent basically got knocked aside by a wage scandal. This shook up basically the markets and the consensus kind of view. This was kind of, if you recall, kind of the risk off that we started to get kind of in early kind of Feb. And then we basically moved into, I guess you could say, a consensus view that actually Macron had it in the bag, appealing, to both the left and the right, as opposed to, let's say, Le Pen, who's on the far right, and Mélenchon, who's on the far left. And then basically the consensus view was it would basically be a Le Pen, a Macron, with Macron basically taking round number two, right? But recently Macron's been losing quite a bit of steam. I wouldn't say a lot of steam, but a bit of steam. But more importantly, Mélenchon has really been picking up momentum. And questions around Hamon, who definitely looks like he's going to lose, at least according to kind of the polls. I think he has less than 10%. So it's very clear he will not win. But the fact that he will not win basically has the market on the edge, because they were kind of evenly going to lose, and now it definitely looks like Mélenchon is in for the running. So we've basically gone from three, which was Le Pen, Macron, and Fillon, to now Mélenchon entering in, and that's four, right? So this is what's shaking up people. Now, according to our main man, Dembeck, from the Eiffel Tower, he's basically saying, like, legally the candidates actually cannot withdraw from round one. So I don't think it can be the similar thing we normally see sometimes in the U.S. and other elections where one candidate formally lends their support to others. But it's worth noting that Hamon, on being asked on whether he would back Macron or Mélenchon, chose Mélenchon. So this is kind of what a lot of people are maybe kind of thinking. Will Hamon's supporters go to Mélenchon? So now the market has to basically contend with now a new scenario of a Le Pen Mélenchon outcome, something that seemed very, very far-fetched months ago. You could even argue weeks ago. So let's just run through kind of a few kind of scenarios on this, and this is just more to make you think, and this is just a graphical depiction of actually the polls. We'll give you a little bit more of a feel. We obviously have Le Pen, who's been pretty kind of steady, a little bit of kind of graduating off, but well above the 20 kind of percent. You can see this is when Fillon started to kind of lose out of favor, the kind of the blue line here. This is really the delta in Macron kind of moving up and gaining from a lot of that. Hamon has been very, very consistent in losing money, kind of like a new trader. And again, this is here is now where people are starting to get a little bit more worried, is this kind of recent delta and uplift in Mélenchon, given doing cool stuff like holograms and multiple kind of presentations across cities in kind of France. But you can see, at least according to these polls, it still seems to be very much a Macron-Le Pen issue. But of course, there's 1 week to go, right? We can see how much can change in kind of 1 week. So if you're not familiar with the French elections, initially it's kind of referred to as the first round is for the heart, i.e. people kind of vote for whoever they want, potentially maybe not taking it too seriously. And the second round is supposed to be for the head, i.e. people kind of getting serious and a little bit kind of more grown up. But it's also worth noticing, just like in the Netherlands, there was a lot of undecided voters. I believe in the Netherlands it was close to 50%, with some of the terms kind of listed out there. In France, we're talking about 1/3, right, of the 47 million voters undecided. And of course, voters in most developed markets are very much angry at the incumbents, the status quo, politics, and kind of the government in general. So just something, again, to kind of keep in mind. Now, what I did over the weekend and spent a lot of time was just having a little bit of a feel on potential kind of scenarios, if we, for instance, had the election yesterday, right? And what I've done here is I've listed the scenarios of who comes out in round one, right? And here what I've done is I've taken the close we had on Friday on Euro-dollar cross, German 10-year bunds, U.S. 10 years, and gold, which will give you enough feel for how some of the other assets will do. And of course, we'll just touch on equities here in a bit. I'm not going to go through every box, but obviously a Le Pen, Mélenchon would be massively negative. Bull market hell or bear market heaven, if you will. It would basically be bye-bye parity. I think we could see euro-dollar collapse by 10%, getting us into kind of like a 95 cent to 101 kind of range. Bunds, again, sub 0% from these kind of 20 basis points. We'd have, again, continued flight to safety playing across on U.S. 10s. I think we'd get to 2 to 2.1, potentially even break 2. I mean, we've seen U.S. 10s easily move more than 20 basis points in one day, on even sometimes things that maybe don't seem like they should have moved that, right? Going back to the whole issue of liquidity. And again, gold will be, a hell of a party. I could see a $70 to $120 lift in gold, breaking above 1,300, 1356 to 1406 level. These are kind of the way things could kind of potentially kind of play out in this. Now, let's go through, I guess, kind of what other people would be thinking as a Fillon Le Pen would be potentially the other side of that, very positive. Fillon, if you don't know, is a French Thatcher. The fact that he can still hold his own while under investigation and everything tells you a lot about kind of the political situation in France and Europe as a whole. Definitely bull market, I think. The bulls would run through the street. I think it'd be euro-dollar liftoff, plus 2.5 to 5 figures, taking us from these 106.20 close on Friday to 108.70 to 111.20. I would say German bond yields would come back very, very strongly, and kind of similar on U.S. 10s, perhaps not necessarily as strongly as the German kind of bonds. And of course, gold would kind of be in full kind of retreat, breaking back below that kind of key, 1265, 1270 kind of 200-day moving average that it took a while to kind of break through. With all of that said, I still think it's going to end up being a Macron-Le Pen. I don't feel like I have an edge on this, or anyone does for that matter. But I still think it's going to come down to what was basically consensus a few weeks back. I think we could see a euro-dollar pop, 1.5 to 3 figures, taking us to 107.70 to 109.20, which is, we were just at 109 2 weeks back. And again, it popped back again in yields, and again, gold going back probably below the 200-day. I didn't put equities here because equities to me are a little bit just trickier in regards to knowing how they'll play out. And this is basically from the perspective of we've not really sold off in equities, right? You look at the charts, a lot of the main equity indices are close to their highs. To me, they suggest that no concern seems to be really priced in. It makes you just really question how much upside there really is in, let's say, a Macron-Le Pen or a Fillon-Le Pen victory. So just something to kind of keep in mind. I mean, I would have thought in a Le Pen, Mélenchon, you could have a -5 to 10% pullback in Eurozone equities. That still seems to me to be more maybe tactical than structural. And I think it's a asymmetrical skew, a negative asymmetrical skew, because I don't think the pop-up necessarily in, let's say, a Macron-Le Pen or Fillon-Le Pen would be as robust. One thing that's worth noticing is this here is kind of meant as tactical kind of, moves in a few days to a few weeks. Structurally speaking, what a lot of people have not yet had time to focus on is very few people here, whether it's Macron coming into power or Le Pen coming into power or Mélenchon coming into power, very few of them are really actually going to be able to make structural change, right? So that's just something to kind of keep in the tail end, but that is something for a different kind of feeling of thought, and that's something that's a little bit more kind of structural, so to speak. But anyway, this should give you a little bit of a pathway and kind of what I think some of the parameters could be. One big caveat to think about is, how much of the risk off we've been seeing over the last kind of 1 to 2 weeks is due to the Eurozone and how much of it is due to kind of geopolitical kind of risk. I've had a bit of pushback on a few people and maybe, let's say, 10 years, maybe not bouncing back quite as easily back to 2.4. And fair enough, we're in some kind of critical levels on a lot of these kind of asset classes, but should definitely give people something to kind of work with. But again, to me, it really seems that the upside to equities, even in a favorable outcome, is capped, and it's really the biggest move could be on euro dollar, kind of one way or another. And again, this is just reiterating the fact that we've not really seen the risk-off signs in equity that we've seen in gold, silver, oil, bonds, whether it's bonds, JJBs, or US 10s, the yen, and to be honest, actually the Swissy for that matter, right? The Swissy actually really has not strengthened that much against the US dollar, and that could be another trade to kind of consider for this week. This is just managed to put on one trade here on the strategic book. This is basically, as you know, for a few weeks I've kind of been waiting for a pullback in emerging markets FX, not really gotten it, finally got tired of waiting, so put on short dollar Mexico, not at the full clip that I'd like. We're short from Friday, closed at 1852. A few kind of sell orders in, which I have on this kind of line here. 50 basis points of risk at 19, 100 basis points at 19.5, and at 20. And very kind of wide stops at 20.32, and also have wide levels that I'm targeting, 1708 and 1608. And it's something I'd like to add on a little bit more on at least the EMFX kind of theme, just hoping for a little bit of pullback. I've kind of highlighted the first target on gold and silver that we're expressing here through Gold Spot, as well as SIL, which is the silver mining ETF. As at least on the gold, we're very much kind of within striking distance of that. So it could be interesting to see how kind of this week goes. I actually do think that we do take out the 1300. That's more just kind of a gut feel than kind of anything else as we kind of got through that kind of congestion. Actually, we're 1294 as we're doing this right now. So that's almost as good as done. On the tactical book, there's no new positions that I added. Got very close to getting stopped out of this euro dollar, but it lives to fight another day, at least for now. Now, again, we don't have the normal experts' advice of the talented James Kim or Edmund Liu. So this is kind of a bit of the KVP edition. I've done a few bullets on some of the things that kind of caught my attention for one reason or another, things that I think are a little bit more interesting. A little bit of this I'll be kind of rehashing. Equity indices elevated. We're seeing bearish technical indicators starting to tick in. Look more kind of high probability in regards to kind of risk coming off. If you recall, I had a DAX short about maybe 2-3 weeks ago, which I think was a little bit early, or you could say the stop a little bit maybe too tight. But I really think that a lot of the equity indices look like they're stalling. Dollar yen continues to look very bearish, very key kind of weekly close below the 200-day. Market's starting to get long. DXY is looking questionable in regards to kind of holding here to bouncing. Funnily enough, despite these other risk-off signs, Aussie dollar and Kiwi dollar looking constructive, even despite the commodities kind of pullback, particularly in the Aussie. So risk is to the upside, at least technically on this, even though positioning favors the Kiwi, i.e. one-year record lows. And of course, if that CPI beats on Thursday, you could see a big move up in the Kiwi and a big move down in Aussie Kiwi. Again, I think the price action on sterling remains very, very strong. Cable is now in between this kind of 200-day and 100-day kind of moving average of 126.29, 124.21. I think it's going to break to the upside, which is a very, very big statement because it's had a very, very big run. If you recall, we were close to kind of 121 just a few weeks back. Euro dollar has avoided the bullet. It doesn't look as bad as it did 1 to 2 weeks ago. We did close south of just the 100-day on Friday, so we need to kind of get back above that. And the key level to really break is the one that we bounced off of, which was the 200-day at 108.50. If you recall, we got to about 109, punched through there, and then kind of quickly reversed. I believe that's 2 Mondays back. And gold broken off and off to the races. 1,300 we're going to take out, and this is probably the key support here. Took about 6 times to break through that. Ditto on silver. Both weekly charts on gold and silver look very, very strong. Another close above the 200-day, I think is needed for sustainability. And I think we're going to get that, to be honest, just given the French election risks, unless for whatever reason one of the candidates does something spectacular that takes back the running from 4 to 3. Oil, very strong price action again. Closed above Friday, 100-day of 53. Very, very, very strong. And again, on the weekly, we're still seeing higher lows, higher highs. Bunds, funnily enough, we bounced back from the 200-day of 17 basis points. We're very close to that, about kind of 19 basis points. I think this could actually reverse quickly. I've been speaking to a few clients about, when to kind of short bunds, i.e., on expecting kind of a Macron, Le Pen victory, and then Macron to take it in round 2. I think you'd already have a clip on. I would definitely have a clip on, at least for now, because I think when the reversal comes, it's going to be very, very kind of quick. Of course, you also have to bear in mind that we're at a key level on bunds, which I believe, highlight, where we bounce back in early DEC, early Jan, early March. So kind of these like 20, I guess you could say kind of high teens to 20 kind of basis point levels. But also note, this was something we had on the US 10s, and we actually kind of broke that. On the US 10s, it was kind of closer to that kind of 228, 230 kind of level. And US 10s actually still look quite bearish on the yields. And we're close to breaking a very, very key level, which is 2.2. The amazing thing to me here is we're doing this, despite still equities not really having pulled back. So it kind of makes me think that if we do get a pullback in equities, there's maybe a little bit more kind of fire behind kind of the move that we've been seeing in kind of US 10 years. So, a close below 2.2 would be key. And worth noting, on Friday, we closed below the 200 weekly moving average of 2.2580. So I'm just going to walk you just through a handful of charts. We're not going to go through all of these things. You can just come back and revisit this and check out these charts on your own. But here is, for instance, the CAC. As you can see, very much lower left to upper right kind of chart. Very little pullback, if anything. Losing momentum on the RSI, so you're seeing a bearish divergence. This is kind of the theme on a lot of the equity main indices, basically showing you the momentum is going out of the move up, right, compared to what's happening on the RSI. And we also see the MACD turning kind of negative here, suggesting that a short skew is probably preferable to kind of have. Despite kind of the event risk. Ditto really kind of on the DAX. Here actually, even maybe bigger loss in momentum. MACD already crossed over a few days back from the previous week. This here is dollar yen. You can see we're kind of starting to get into overbought territory, but given the events in this upcoming week, probably not yet too kind of concerning. Key close below the 200-day of 108.79, and we went through 110 like it was nothing. Again, very kind of bearish, or should I say bullish for yen strengthening. And of course, Aussie dollar, these are kind of why I think the technicals are very, very supportive. RSI kind of far from being overbought. MACD about to cross up, right? And you can see this very, very strong kind of bounce back off of the 100-day that I spoke to a few clients about, as we've done that kind of previously here before, as well as kind of here. And of course, we're now also closed above the 200-day on Friday, which is a weekly close, so stronger. And again, this is gold, similar kind of thing on silver, where you can basically see, despite kind of RSI being overbought, probably not an issue given the event risk coming over the weekend. And we broke through this key level, which is the 200-day. We had to try it through about 6 times before finally breaking through. And off the chart here, it looks like it's off to the races, and the weeklies look that much even stronger. Last 2 charts, this one here is German 10-year Bund yields. At about close on Friday was about 19 kind of basis points. You can see we've kind of bounced off of this level here pretty respectively. You could call that maybe, I don't know, 17 to kind of, let's say, 20 basis points. The key level really to break is this 17 basis points on the 200-day. The RSI is, again, about to get into kind of oversold. But again, hard to see that necessarily reversing kind of the event risk. But you can see why it's interesting if you've been looking and thinking about shorting this, as I have, where you may want to be taking a little bit of a clip just in case we can't fully break through this on. So whether you're talking a quarter of a position or a third, that would kind of be my thinking on how I'd position around this if I do want to have this short bias, and if I do think that the highest probability trade and outcome is for Le Pen Macron, and then Macron to take it in the second round. And finally, in the US 10s, you can see very kind of bearish, broken this kind of key level that was up around here, just eyeballing it. That was probably kind of high 227, 230s, and below obviously 100-day. 220 is really kind of a key kind of psychological kind of level to have and to keep kind of in mind. And of course, we're still miles away from the 200-day of 205. I think you need Macron and Le Pen victory to see any kind of scenario kind of there. RSI still not even oversold kind of yet, but yet getting there. So that's really all from my end. Do please join us kind of next week and drop any kind of suggestions you may have. Let me wish everyone, again, very happy Easter, even if you're still having it. There's a lot of people still off today. And all the best and good luck this coming week. Thank you so much.